afternoon, everyone. BC Ridgefield here, coming to you live from London. It's just gone 1 minute past 1 p.m. in the afternoon here, making it 1 minute past midday UTC. A huge shout out to everybody joining the stream live today. I have the absolute pleasure for filling in for the legendary Crypto Burb today. So if you've got any questions, if you've got anything you'd like to see, time to get maybe a slightly different view on the market. So how are we all doing today? Lots of people flooding into the stream. Wonderful to see. Obviously, we've had a little bit of a sell-off, right? So want to just jump straight into Bitcoin with everyone. I know we've seen a little bit of a pullback here, people getting pretty bullish in and around here. And I just want to kind of cover with you guys what my thoughts are more on kind of a higher time frame basis. If you do have any questions, please feel free to add them to the chat. Be good to one another, be polite, or I'll kick you out. Simple as that. Apart from that, everybody is here to learn. So how do I see the market? Well, very difficult filling in for someone like Crypto Burb, right? Because whether a lot of you know it or not, he's a CMT, a chartered market technician, level 3. That's basically the absolute top of the tree. He's one of the most knowledgeable people I've ever spoken to about charting. But the wonderful thing about trading is that you can approach it from so many different ways. We have a crazy saying here in England, which is there are many ways to skin a cat. Not really sure I want to know where that comes from, but it is a saying nonetheless. And it just means that we all can have a lot of different approaches to achieve the very same aims. The key thing is that you have a plan, in my opinion, that you have a high time frame strategy, you have a time frame that you're framing your trade on, and then you have a time frame in which you execute, whether you're somebody that uses support and resistance levels, whether you're somebody that uses moving averages, indicators, for example. The key thing is having a strategy and a system in place when you get to those key levels. You don't want to be taking trades in the middle of nowhere. You want to make sure that your system is attuned and ready to go when you need it. The great thing about that is it delivers us a lot of confidence as well. Okay, so we don't hesitate when it's time to execute. So what does all of this mean? Well, we're going to start with Bitcoin. I'm going to run through some top-down analysis for you. Just want to say a big hello to some legends already in the chat. Just Pit, my absolute man. This guy has come in to the TBN Discord in the last kind of couple of months, been a huge part of it, has recently joined up with the trading team there and has just been crushing crypto. So we're going to cover that a little bit more in the show and going to give you some details and bits and pieces so you can follow him. Erica, another wonderful friend of ours at the Nest, along with Whack. IDG as well. Hello, mate. Big welcome to everybody that's in here, and Uluwezi Malogo as well. If you're in here as well, mate, very much hello. So what are we looking for here? For me, I'm always thinking in two ways. Okay, where's price delivering from, and where's the most likely destination? Okay, where's price reaching for? So looking at this on a weekly basis, to give you guys a little bit of an insight as to how I see the market, I'm looking at the market in the way that price is in a constant flux and search for liquidity. Okay, that's either above old highs like we have here or below old lows. Now, if it's not looking to do that, then it's normally looking to rebalance an inefficiency or gain delivery from an order block. So we're going to cover that as well. Dora, hello, my friend. How wonderful to catch up with you yesterday, and lovely to see you on the stream. So what we're looking at the moment is, and I want to really zoom in here. Okay, sometimes, you know, when we get the high time frame, it tells you so much, right? This is the positional plays that major accounts are taking, okay? And that's a really big thing. So what do we want to do? Well, we want to find out where the major players are positioning, right? And I'm not talking about your favorite influencers, legends like Burb or SZ, all these massive accounts who, you know, are just absolutely crushing it week on week, month on month, year on year. I'm talking about major hedge funds. I'm talking about financial institutions. I'm talking about countries that are buying Bitcoin, things that eclipse the levels that even those legends can buy and sell at, right? So what we want to do is we want to find out where that impetus, where that momentum is coming from. And we want to just grab ourselves a little slice of that. Doesn't matter what time frame you're on or what you're kind of looking at, as long as you can identify those levels, then they are key. So just to give you a little example here, right? When we attack liquidity below this low, yeah, we see how price reacts. We get a little close below it, but the wicks tell us so much, yeah? So look, when we came into this high, and let me just draw it across for you, all right? When we came into this high back here, see how we had this huge expansion candle, very small upside wick there. See, almost, you know, almost difficult to notice. Then when we get this large expansion through here, look how big the body is on this candle. But look how, you know, very, very marginal wicks. This kind of wick here, yeah, tells you that maybe price is looking to pull back. So for me, I would have been targeting this inefficiency over here. All right, just simply a gap. These gaps are created when price fails to meet orders. So basically the sell pressure is so strong here that you're not getting the order pairing. So you get these gaps. When you see this very efficient price action here, you can see all of these wicks overlap one another with the bodies, and we don't see any of those gaps. That gives us efficient price delivery. Price delivers beautifully from this fair value gap that we have down here, which is a bullish fair value gap. And I'm going to draw that in and leave that there for a moment. I'm also going to do it in green for everyone, okay, just so that people can see that. It just gives us the idea here that this is bullish, and that this is an area that we expect to find support. Now, please do remember that this is all based around the context of what time frames you're trading. You know, if you're using a weekly chart for this kind of thing, then you're probably using around about a 4 hour to frame your trades and probably a 15-minute or something like that to execute. I'm much more of a low time frame trader, right? But these principles expand across the timeline. So we'll focus on the kind of middling and higher time frames today, as that's pretty much, I would imagine, what Burb's audience is all about, right? Jackie, hello, mate. Crypto Viking as well, and everybody else that's running into the chat. Wonderful to see you here. So look, we expect this area to offer support, right? Because there was so much buying pressure here. This big gap didn't allow all the orders to pair, and then price just shot away. Now, when you see big moves like this that leave these gaps, quite often people, and you hear them often referred to as retail, which is all of us, by the way. It doesn't matter if you're trading with a few bucks or you're trading with a few hundred or a few 100,000. You are not competing with the tens, hundreds of millions and billions that major players in this market are. And that's not something to worry about, or, you know, people get defensive about it. Forget that. Look, just align yourself with what those players are doing, right? And let's find a way to win. So what happens is, typically you'll hear this phrase used a lot, you know, the smart players, you know, they bid low and they sell high, right? Most people wait for some kind of confirmation. They wait for this expansion, then they start running in here. The problem with this is that people come into these kind of moves and the market, you know, stop loss is down here and it's ready-made for the market to come down and wipe them out, all right, in the way of generating liquidity. However, when we revisit these gaps, it's very, very hard to be bearish, yeah? Because we're looking in here and we're saying to ourselves, do we have any other reason here to be bullish? What other liquidity pool could we be tapping into? If this is all people selling hard, yeah, and people have stop losses below these lows, right? These will obviously, this is a swing low, this one here, but these will also represent, that is a swing low, obviously, but this will be on a daily as well. Then what you've got here is a cluster of liquidity starting to build, and that typically gets attacked, right? So what are we looking for? Well, we're looking for that to be, as we said, attacked, right? Price comes into here, draws down into our bullish gap. Look at the reaction on that wick. Remember what I said to you. Let's just take a moment to look at all the wicks here, right? Yes, you get some long downside wicks here. Price is in a state of flux here, a state of indecision, right? It's drawing down, drawing down. You still have buyers stepping in. Nothing wrong with that. Doesn't mean that they're right. Doesn't mean that they're wrong. But look at the difference when we actually engage with an area that we can overlay some analysis on properly. Yeah, because look, I don't mean this to be a twat in any way, right? But why are you long in here? 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 Like on a weekly basis, this is, right? Where if you long here, you're driving into an area where you know there was an extreme amount of buyers previously, right? And here, you know you've got people with their stop losses. Yeah, so what happens? People get taught, fill your long trade, target the highs, put your stops below the low. And how often do you hear this from people? Do you know what? Price just came down, wicked out, took my stop loss, came back in, and then went exactly where I thought it was going to go. That's because of the liquidity games that are at play, right? So we've taken the low, we've seen this recovery here, right? And what happens here? You say, well, actually, BC, it's not technically true, because look, where did price react from here, right? We didn't take this higher. No, we didn't. But price has a really clever way of generating its own liquidity. Yeah. Look at this very, very marginal sweep here. I mean, I can't even almost zoom in close enough, sorry, for you guys to see that, right? That's a sweep. Now look at the reaction, right? We've been talking about reactions today and what we see from price, what we see from candles, yeah? So look at this. This gave us a beautiful pin bar candle, right? For anybody that doesn't know about that, hit us up on Twitter, all right? And we'll share the website with you. We'll share everything you can imagine. Also, as well, it's worth remembering at the moment that we have opened our Discord completely for free, right? So just to give you a little example of what we do on there, all of the trades that we share, here's our legend Just Pit on here as well. We can see some of our members on the right, Craigie Boy, Trader Mum Joe, been with us for a while. But, you know, these are the kind of things that we share. You can get access to all of this for free, all of the calls, all the education, everything for up to 60 days, right? We're going to be closing it off soon. It's just our way of trying to help everyone kind of get back on their feet while the market is pulling back. But in the same vein, please do reach out to us as well. If you've got any questions on this, just hit us up on Twitter. We'll give you the links to infographics, the website. There's loads of good free resources, all right? So going back to looking at how price is reacting, what have we done? Taken a low, closed back above, created this beautiful pin bar candle. And this is the kind of thing you can ask for one of our cheat sheets on, candle patterns, right? Pin bar candle followed by bullish engulfing. That's telling you that price is seeking liquidity higher up. So we see we get the bullish candle, we wait for the confirmation, and we trade it higher. Price creates its own liquidity here. We saw a minute ago when I zoomed in that we have that very, very tiny sweep. And they're the kind of reactions you want to see. If you see a strong reaction like that, and again, look at what we've got. We've got a large body pin bar with a micro nose on it here, followed by a bearish engulfing. Now, if my good friend, you know, one of our traders over at Nest as well, Bast, was here, he would be getting super excited about this because one of his specialties is looking for these reversal candles followed by a confirmation candle. Yeah, so in here, for example, you'd see the pin bar, he'd see that bullish engulfing, and you know he'd be throwing in long here, which is brilliant. I love that approach. Not how I trade personally, right? But it's certainly how I used to trade, and I really, really, really respect it. All of this stuff becomes even more relevant on the higher time frames that we're on. So we've got this sweep, we get our pin bar, we get our engulfing. Where's our expectation that price is heading for? Well, we just look for the nearest liquidity at that point, and we've got this low, yeah? So now we're at this low, we see, look, we get a really good reaction here from price. It does get bought up, but this is where you need that little bit of a closer view, right? Because now you're saying, all right, let's go long. Well, remember our idea about confirmation candles? Yeah, we've got no secondary confirmation candle here, but more importantly, in my opinion, we leave this bearish gap, right? Now, this bearish gap here is designed to reject price, the same way that this bullish gap here is designed to pump it. The only time we fade that is if we close below them and violate them, and I'll show you some more examples on lower time frames. Now, here we see price does its job, yeah? So expectation here, because we've got this pin bar candle, is that price is going to be short-term bullish. But where to? Quite simply, the next liquidity pool that we're targeting, which happens to be this gap, and also the high of week. Yeah? So that here is our weekly high. That is a key liquidity pool. So this week opens, we see price opens, draws up, gives us that perfect opportunity. Why does it draw up before selling off? Why doesn't it just drop? This is just to induce people long. This is to get people that really want to pump the market, people that think that we're going up from here, people that maybe see this candle and rightly think that it's bullish, which it is, doesn't matter the color of it. It's a bearish colored candle, but it's a bullish candle. And SC taught me this better than anyone, and that's the bodies of the candles tell you where price has achieved. The wicks tell you where it tried to go. So here, price tried to drive all the way down here and just got bought all the way back up. That tells you that there's buying pressure under here. So when we sweat this higher, deliver from this bearish gap, what do we then expect? We expect price to seek the next liquidity. Where is that? It's here, yeah? Then we see this long downside wick, so we kind of say to ourselves, all right, let's treat this like a range, yeah? So how do we look at this like a range? Well, there's a few different ways that you can do it, but you could take this high, for example, down to the first key low. You could take it down to this low here. I personally like that. Let me get you this drawn up. Let's make that a little thicker. Now, why is this important? Because look at the midline here. Look at how price interacts with it. Hold, 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 hold. Closes below, retest, sell off. All right, that's as we create the range though. So you know, as you draw this in at this point, that you've got 2 contact points here. Some people will tell you need 3. Like I say, there's a lot of different ways to approach this. For me, I'm looking for a strong expansion and then a key swing low to be set. And for price to give me some engagement along the midline, we can see we get the close above, price deviates, closes back below. What does it do? Sells off to this key liquidity here. We deviate this again, we've sold off once again to this key liquidity lower down. So what does that all mean? Well, quite simply, the last thing I just want to cover with you quickly on this is what happens when we violate these gaps. Yeah, so when we close above these gaps, they turn into an inversion gap. That means it's just very simply a support and resistance flip. Now, remember what we said here, bullish candle. So we've got a short-term bullish catalyst, but ultimately we're moving into a bearish state of delivery. Here we see this big expansion. This is a big bodied candle telling you that price wants higher. So we look for the nearest liquidity pool, all right? The first one here is our high of the high of week. Yeah, for this week, same as we did down here, remember? Price saw that rejection. Do we get a close above that? No. In fact, what we see is price goes up. Yeah, obviously price really sells off aggressively. Why? To retest this. Yeah. So just to retest this area here, so price sells off, comes up, closes, and then comes across onto here, then tries to get back above again. Remember, still a bullish candle, more of a kind of doji, so an indecision candle, but I like the long downside wick. But again, we failed to take the prior week's higher. Yeah, we take it, failed to close above it, sorry. Tells you that price then is looking a little bit weak. When we close back below this, like we would with a range, yeah, let's just draw out a quick range. Okay, so here we've got our range. What are we looking for when we've got an established range? Well, how price reacts within it, right? If you deviate a range, you close back within it, the chances are this is a sign of weakness. And then you look for that little pullback. You trade it to the mid, see how it reacts at the mid. You get back under the mid, then you chase its range low. You close back within the range. Once again, you're looking for these support and resistance flips until this area here becomes support and you take out this high. Almost like, so once we set this higher, we don't get back above it, right? You see price fails, comes back within the range. Why would it be in here? Why would it be back in the range if it's showing strength to break out of it? Whereas here, if we draw this along, see price has that expansion. Price then holds this area. If you want to be super conservative, then you can wait for a break across this level here and for price to then use this as a platform to push higher, okay? So that's what we're looking at in terms of that. And we apply those very same principles here to highs and lows, yeah? We can't close above these highs. If we can't show that momentum, we can't show that impetus, then what can we expect? So before I rattle on too much, and you get rid of that. So basically, where are we now? It's like, that's all great, BC, but come on, I want to know what price action's doing now. Someone give me some hints, right? So at the moment, we're back above this level, yeah? We've got this low here. What's this? Deviation. Always hear SE's voice in my head when he says that. Deviation, prices climb back in, we expect higher. Where's the first place that we expect price to reach for? Is here. Yeah, why? That weekly high, it's also a weekly swing high because it's flanked by two lower highs. Then we look for the liquidity pool of the fair value gap. Then when price sets this higher, it's the weekly high, sets a higher high, that higher high again, gets back underneath it. Then we're saying, okay, this is looking a little bit weak here. So again, big bearish engulfing candle, we target the prior week's low, and we want to see what the reaction is like there. Now, all of a sudden, look, and we have news catalysts to bring into this as well. But the truth is that I don't want to overthink these things, right? I will look at the news every day. I will factor those things in. I am typically a traditional market trader as well. So red folder news means a lot to me. That's things like FOMC. That's things like jobs reports, unemployment claims, retail sales like we saw yesterday. Retail sales came in so strong yesterday, combined with a very, very mute CPI print in the midweek. And then from there, the kind of market was a little bit loose. And ultimately what happened was we saw the money flooding in to the equity markets, right? And that risk bid came in, but crypto just didn't quite catch that. So what are we and where are we now? Hans, my man, longtime friend of mine and the Nest. Welcome, welcome, welcome. Scotty as well. Thank you very much. They try to be direct like my Polish brothers and sisters that we're here with. And then 2P as well. Great to see you here as well, mate. So where are we now? Let's just get rid of all this, right? Okay, technically we could have kept the bullish gap in there, which we'll put back in. I'm going to put this back in as well, just so that we can keep this as just a point of reference as we move down onto the lower time frames, because I'm going to teach you how I like to frame these trades. So remember what I said. I'm always asking myself, what's the last thing the price has done? Yeah. So where's it been? Where's it delivering from? And where do I think it's reaching for? So the last thing the price has done really here is take out this swing low. We know there's loads of liquidity below the swing low. We saw this big expansion higher. Lovely. Now, my thought process was very much aligned around this very skinny bearish gap. All right. Oh, Hans, horribly sorry to hear that, mate. Nasty. The part of business ownership. I've been there a few times in my life before I committed 6-7 years ago to full-time trading, and it's a difficult, thankless job, mate. It is, but I'm sure you do it very well. So my thought process was this: when this candle closed and we created this bearish gap here, we've taken liquidity from the lows. Typically, when we take a key external liquidity like this, we look for this internal liquidity pool, be that a fair value gap or sometimes like an order block. But typically, I favor gaps. Now, my expectation was for price to draw up towards this gap, and we started to have that, but now we've started to sell off, right? Now, what's going to be interesting here is we normally see relatively mute price action over the weekend. Sometimes we don't, but historically, statistically, over time, we do. Traditional markets are closed, therefore, it kind of takes a little bit of that. But what we're seeing here is pretty much a doji favoring upside, to be honest, because the downside wick is a fair bit longer than the upside wick. But at the moment, this looks like the more this pushes down, the closer that this is getting to becoming a pin bar candle. All right. Now we know, lower low, lower high, lower low. The weekly's just stepped into a phase of bearish price delivery and market structure, the break of that low. So at the moment, on a weekly scale, even though we're within this fair value gap here, this becomes less relevant now until we invert it, or if we invert it. And what do we need for an inversion? We need this candle to close all the way down here, close below it. If that happens, this box becomes purple, and we treat this as our support and resistance flip as we covered earlier. Now you're saying, well, why was this, and this isn't purple now, it's still green, but why is this now not relevant, BC? Well, we took that low, but you see this gap we left below it? That wasn't completely filled then. Now that has been completely rebalanced with this wick. So for me, I'm not looking at this as the support mechanism it was before. I'm looking at it to see if price comes that low to invert it. If it does, my expectation are for these gaps to be filled. And in truth, the next liquidity pool under there on a weekly scale is down here at 38,555. Now, I'm not saying we're going to get there before you all start giving me crap in the chats, right? But I am saying that that is the next swing low on a weekly scale under these gaps. I would expect these gaps to do something else we want to factor in as well. If we take the entire expansion leg higher, which we can see here, yeah, price has actually reacted really beautifully here at our golden pocket at 705. Yeah, we also notice the 0.79 level lines up perfectly with this gap here, but we've now also come down and almost completely filled this lower gap as well. All of the catalysts are there for price recovery. Now, we need other factors to be going well. You want to risk off sentiment in traditional markets, right? And, we look at things like the DXY in that respect. Yeah. So you want to see a weak dollar, typically, yeah, for risk to do well. Typically over this period, the dollar's has been pulling back here since the 1st of July. We whack that over onto here. Yeah. And then we go to July in here, and we see the price had that nice pump, right? Now, you can see by the fact that price has pulled back, they're not directly correlated. It's just simply something that we use for a bit of extra confidence, right? So what is this? I'm going to now delete this off the chart. We're going to go back to our full screen. I'm going to say, well, look, if price isn't ready to draw to this up here, if price is looking really heavy, then, on a weekly scale, 49K flat. And that always worries me a little bit. If I'm looking at a target, it either worries or excites me. If I'm a bull here, that worries me. If I'm a bear, then that excites me. Round numbers like that are there for a reason. $49,000 exactly. That's where that amount of bids were placed that caused this big reaction. However, we also need to appreciate that we've got a weekly low there. I'm going to draw these back a little bit because as we go to the lower time frame charts, it will zoom miles out of the side. Right, so now I'm going to go down onto a daily, and we're just going to overlay the same principles we were discussing before, right? And one of the things that had me a little bit tweaky, shall we say, when I saw this, yeah, so this came in yesterday, Thursday's candle, we'd actually, even though we've been kind of consolidating around here, we'd held this quite nicely, this bullish gap, yeah? So again, we need to remember this is the displacement leg lower. Why does that mean anything? Well, if we take our Fibonacci from here to here, what's price now doing? Price has reacted after this sell-off. It's come back into a bearish gap, which is respected. It's then hit the golden pocket again, and it's now started to sell off. So we're looking at this, or I'm looking at this certainly, as that kind of line of support here. Now, on the flip side, we created this expansion leg higher. So if we look at that here, we can also say, well, price really could come down a fair bit lower into here. Now, what gives me the inclination that it might do that? Well, the fact that we close below this. Now, one thing I will say is there's always nuance to anything, in my opinion, that you look at when you're talking about liquidity. So if we're marking up our levels, we have this, which is our swing high, right? So that's key liquidity. This is the swing low. We can see this price is either going to come for this or it's coming down for this. This looks closer and easier. Price is already starting to deliver bearishly. High, low, lower high, lower low. Yeah, if this confirms, or it keeps driving down anyway. So even if this candle closes, that still confirms a lower low. Now, remember, this should have provided support, and it did for several days. Price failed to capitalize on that, and ultimately we closed below. But it is a doji candle, and we often see these type of candles when we see like a trend exhaustion, right? Or I'm just going to try and give you an example here. Right, these aren't great, but this one, doji candle here, right? Look, slight pullback, doji candle, price continues with the trend. Yeah, large pullback here, doji candle reverses the trend. Small pullback here, doji candle reverses the trend, right? Pullback here, doji candle, price reverses the trend. So maybe this is a large kind of doji candle in terms of the body, but maybe this is telling us that the pullback here is looking to push a bit higher. Now, the one thing, normally, if I see an inversion gap like this, I don't mess around. I just simply say, and I'm just going to draw a box in here so that we can clear this chart up a little bit, just so we know that's our golden pocket. Right, so for me, I'm saying, okay, well, this is a clear downside target as well. That's our golden pocket. We've seen how well that's been respected so far on the high time frame charts. But one thing that makes me think we might be looking to recover this is this downside wick. Now, again, you typically, when you see these violations, you want to see a large body close, yeah? And if we look at the wick on this, it's basically equidistant. Yeah, a lot downside, maybe even a little bit longer than the upside here, all right? So if we're looking at that, if price comes back within this after rejecting it, if we close back above this, then that's it. I'm targeting this high. It's as simple as that. But on a daily scale at the moment, I have to respect the fact that we're delivering here from what was a bullish gap is now a bearish flip, if you like. It's no longer a gap, but it is something we would consider resistance. So we need to be patient. Now we're going to move down onto the 4 hour. Really good question here from Hans quickly. So let me just, actually, we'll cover this on the 4 hour, Hans. Let me put this up here, and we're going to move here. So what ones do you trust? What ones don't you trust? So typically for me, and let me just turn the session breaks off a moment. So just to kind of finish up on that, right? If I'm expecting bearish price action from here, what am I looking for price to do? Well, I'm looking for price to reject at bearish gaps. Like that, right? Bearish gap, just like it did here. Bearish gap. Now, what Hans is talking about here is, okay, what gaps do we trust and what gaps don't we trust? So really, really good question. Now, the key thing for me here is, you'll get a lot of gaps everywhere. The difference is that you never really know for a while how if price is trending or not. So let's just look at this example here. So kind of price is kind of consolidating here, creating this kind of range within this. And you're kind of saying to yourself, okay, well, are we trending here? Yes. But by the time you realize you're trending, you're all the way up here. What I would say is if you see these really large expansions like we got here and like we got here, what I do is I target the immediate gap. Right? I target the immediate gap because price might just be so strong that you take that. Then you look for your confirmation pattern in there. And for me, on a lower time frame, it's something like this for a long. I'm looking for a higher time frame level to be engaged with. I'm looking for price to sweep that liquidity. Right? So let's say we've got let's say we've come into this gap here. Right? So across here, price has dipped into this bullish gap. Yeah? Move this out of the way so it's a bit clearer. Price has dipped into our bullish gap here. I'm saying, okay, well, I'm looking for longs here. When do I not look for longs? Well, if price just continues to meander down. However, if I see price react from a bullish gap, sweep liquidity on an execution time frame, not on this time frame, on the time frame we're looking to take orders, then this is what I'm looking for. I'm typically looking to be a buyer around here, or for a pullback to a bullish gap, in which case I then draw onto lower time frames. But the key thing here is, if you're in a strong trend, Hans, what I would say is look for the immediate gap. If price is just trending as stuff, you can do the same thing, but I would actually look a lot more for a 50% retracement, right? So if we look, for example, let's just go back to a point here. Obviously, when price is trending in and around here, yeah, we see, look at the large sell-off that you get here. And quite often, you know, these gaps don't necessarily get retested. They can provide really good confidence later on, though, in a form of mitigation, because that should have been a bearish gap here and it was never refilled. Yeah, never rebalanced. Here you would expect a rejection. So in here, you would have got a lovely intraday short. However, this expansion above it tells you immediately that that's now violated. This then becomes support, as we discussed. And then from here, you're looking for that candle to close. And like I said, remember, now we're at a strong uptrend. We're then looking for that first immediate gap. Yeah. If price violates that gap, then the first thing that I will do is I will take the price deck. I'm looking for a clear and obvious swing low. For me, it's this one. Yeah. And then as we move this higher, and I know price didn't actually violate this, right? So just going to give you the example anyway. But if price closed below this, then I would be looking for lows or gaps in the lower 50% of this range. Yeah. Including all the way down to the golden pocket. Okay, now if I just overlay this to this or a more recent expansion, the one that we had over here, right, we can see price comes up, sets this high. We've got a clear low to a clear high. Our expectation is that price is going to find support around the midline here. And ultimately what happens, we have this bullish gap here. All right. Support. You get 1, 2, 3 days of good longs there, right? Until price sells off aggressively, right? It then inverts this. So we expect it to offer resistance, right? So we offer resistance, but what are we getting caught in? The golden pocket here, right? So price comes down, retests, sells off lower, takes out liquidity from that low, takes out liquidity from that low, right? Then when we get back above it, we've got a big pin bar candle here, which makes you think, okay, but look how price is sticking to this. This is our kind of line in the sand, right? Price is respecting this, disrespects it, treats it as resistance, closes above it, meaning that we say, okay, no problem. It's obviously not relevant now. Where's price delivering from? Remember that. Price is delivering from the golden pocket. Look how well respected these lines are here. Price finds that. And then ultimately, look, we would have expected rejection at this bearish gap here, which we got, sell, strong close above. Okay, look, it looks like a tiny little way to go to this high, but ultimately that's the liquidity that you're then chasing down. The strong close above here then tells you, when you set this gap, that price is looking for liquidity higher again. And what do? Go for those relative equal highs over here. All right, so that, just to kind of share that, that's the kind of principles that I'm using. So the reason that I'm short bias on Bitcoin at the moment is because we're delivering from this bearish gap. I will stop being short bias on Bitcoin if we close above this gap here. In which case, then quite simply, I think price is reaching for this high. It's a great liquidity pool. It's sat at 59,849 here on Binance. And it's a high that's within a bearish gap. We've already seen price reject here. There's key liquidity there. We know there is, because of how aggressive this sell-off was. So basically, until we close above this, my targets are down to 56,078. If I then want to break that down into looking for an actual execution strategy, well, I'll give you a little bit of an insight, because I am covering Burb Show today. So I'll tell you my high time frame triggers. All right. All I'm looking for is for a high to be swept, for there to be very little displacement, if any, above it. You want to see a very small wick, if anything, or a longer wick, price to kind of close back beneath. Then I look for the low, which is this, that swept the high. Yeah. Break that low. Then we can market enter here, or you can put orders on here. You've broken that. You can set a limit order on here. That's been broken there. You wait for that to come in. You trigger yourself in back here. You can then put your stops above the swing higher. Ultimately, I would be targeting lower down, as we discussed. But I would also be mitigating my risk, because we've got this cluster of equal lows under here. Yeah. So as long as I get a 1 for 1 from there to there, and I've got a 1.25, I trim a little bit of profit, and then I'm holding the rest of that for down here, and I will trim again here. All right, so hopefully that makes sense. Now, obviously, the other thing we can do here is this is the area of the breakdown. Price doesn't really have any reason to revisit here, and also these order blocks that exist within here. And the order block I really like from a bearish perspective is this one. You see these as blue on my chart. Why? Because they're the consecutive up close candles before price closed below it. Yeah, price closed below a fraction here, but this was the candle that really did it. So this is an area I'm expecting to offer resistance. Now, I've taken some profit here, got some money in the bank, happy days. I want more money in the bank down here, but my risk is secured. If we come back and take out this high, then if we close above this order block here, then I'm saying, okay, I think price is showing strength here. We're going to kind of move up to fill these gaps. However, until then, I remain bearish, right? You want to see a market structure recovery here before you start to get bullish on the lower time frames. At the moment, I think we continue to see this kind of purge a bit lower. But if I'm wrong, and I get people asking me this all the time, I say, okay, PC, but what if this happens? What about if price comes up, takes out your stop loss, and then drops down to your target? It doesn't matter. First of all, I've already booked some profit, and there's always trades every single day you can take. If I'm wrong, I'm wrong. I take the data, I plug it into my system, I test it over time, and if it gives me a trend or it gives me a repeatable pattern, then I will look to plug that into my system. If not, I keep executing with the same system. Simple as that. But if we do go up to here, yeah, then quite simply, all I'll do is, if we then show weakness again and we break down back below this low and I get a trigger here, I'll just short down to the next liquidity. Price moves level to level, right? That's where it's looking for and searching for liquidity. So hopefully that's been helpful, guys. I know that was a big, long ramble on Bitcoin. I do like to kind of keep these streams quite educational. Does anybody have a couple of charts they would like me to take a look at before we close the stream off? If you do, please just pop them in the chat. And we'll just do a quick top down from our weekly to our daily to our 4 hour and see if we've got any opportunities lining up at the moment. Hans, perfect. You're always welcome, mate. And thank you very much for the good questions. Sometimes on lower time frames, the price action is bullish with a bullish FEG, but price fails, holds, and goes right down again. Yeah, absolutely. So you can overlay this principle on any chart, right? At any time. So let's just find some random price action where we haven't squiggled too much, even on a 15-minute. Yeah. So quite simply, you see this nice expansion here. Now, what this should be telling you, a move like this, Coti and VET, absolutely, is we're holding this level. We cannot displace below it, yeah? Oh, the VET crew are out today. Look at this. Wow, 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 wow. Okay, right. We've only got a few minutes left in the show, right? But absolutely. So Coti, VET, for our dear friend Erica and our new friend here, Bad Fox. AVAX. And let's look at SOL and EGLD. Oh my God, EGLD, Elrond. That brings back some memories. That does. I remember sitting on a stream with Scott Melkier years ago, and he just mad for that. He got, and it did really, really well. But again, it goes to show you any of us can get kind of caught out when we're holding. So price comes down below this low, right? For me, I'm looking for the most clear and obvious gaps here. Yeah, so price is clearly in a state of bearish delivery here. Lower high, lower low, lower high, lower low. But look how it fails to displace. This downside wicks again should tell you the price is looking to do something. Now, initially, we just think the price is drawing up into this bearish gap, right? So we want to be short here, not just blindly, but you want to wait for triggers in here on a lower time frame, right? Now, what happens is price closes above this here with this candle, right? So now all of a sudden we say, right, price isn't content. Price simply isn't content with being short here. It needs a pullback. Yeah, we've had a lot of downwards momentum here. So what we do is we just long, right? First of all, our target would be, okay, longing into this bearish gap here. All right. And then you're then looking for, okay, what's price done in terms of attacking liquidity here? We take this higher. Now, the key thing for me here is I'm looking at these as being a draw on liquidity, where it's pulling to. But really where I start to get super interested here is when price goes up and we take out, look at this massive reaction here, big close above, and then we immediately get back below. And what do we have in here for the keen-eyed amongst you? An inversion gap. We expected that to support price. We close below it here. So then what do we target? Resting liquidity. First of all, equal lows there, but also a swing low. Then what do? we drive back into this platform, this beautiful pre-made platform that tells us that this was resistance. Sellers were supposed to step in. They didn't. Buyers were too strong here. So will the buyers step in again? Well, okay, broken record time, but what do we look for? Well, we look for these gaps to hold, right? So I'm actually going to draw this a bit longer to the gap above it as well, because we have adjoining gaps here. Yeah, so we see that green box. Do we close below it? We don't. We wick below it. Yeah, that's absolutely fine. And guess what? I reckon if we stick a Fibonacci on the low to the high of this move, we've come back below the 50%, almost to the golden pocket. But if I draw it as the 50% one, the first thing that I'm looking for is price driving into any bullish arrays here, any bullish gaps? Yes. Has it taken a low? Yes. Are we delivering from anything else? We absolutely are, right? We're delivering from this bullish order block as well. So all of a sudden, it's quite difficult to be bearish here. And you can even just do this, right? Like I said to you about the entry method, you want to see a sweep, which we get there. Then you want to find a high that sweeps the low. Yeah. And then you can be a buyer here. So that's how I would look at it, right? And then if you do start to violate these, like, look, we have this big pump here. We need to remember higher, 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 low, higher, 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 low. We are delivering still bullish, right? So I wouldn't say that that's really in a trend, but there's definitely a strong uptrend there. So when price closes below this, yeah, we get the close below, we expect it to seek liquidity lower. We haven't had a change in market structure, so we're not looking to be overly bearish. We're just looking for a deeper correction, right? And what we can look for here, right, is the order block. This small order block that led to this huge expansion. I prefer bigger bodied candles here. But if you're in an uptrend, you just want the down close candles to support price. Yeah. If you're in an uptrend, yeah, you want the down close candles to support price. If you're in a downtrend, yeah, then you want the up close candles. If you're in an uptrend, you want the down close candles. Yeah. So just so that that doesn't look too mad to you, this order block is confirmed when this candle closes above it. This whole area here should be treated as support. I allow from the bodies down to the wick, and I want to see price hold above the 50%. Price can buy up as much as it wants under here. And again, broken record time for you all. We also have a bullish gap. Bullish gap delivery. Look how this then becomes the catalyst. And again, you even got an early warning signal here. When this bullish order block was set with a close above, look how it's retested, flies up. However, you didn't get much of a warning signal here, unfortunately. You did hear, which was an early stage that you could take, because these are consecutive down close candles that extends beyond the range of this one. And then all you're doing is you're looking for those to hold, right? If you've got a big order block here, what does price do? Does it come in? Does it hold that down to the equilibrium? It does. Look how well respected that EQ is. And then you just look for those big changes in state of delivery, right? So we are going live with everyone over at TBN in about 15 minutes, right? So I'm going to give you 10 so that I can make a cup of tea. And if any of you, by the way, want to join us on that live session, we're going to cover really in-depth swing trading as well. And talking of swing traders, can someone tell me, is Pitt still on? Is Pitt still in the chat? If he is, he's an absolute legend, because he's been here for about 45 minutes with the rest of you. And he's genuinely one of the best swing traders I've come across in years. And I've had the absolute pleasure and joy of working with legends, or being exposed and learning under legends like Trader SC, Trader Dank, for example, Crypto Bird, Trader Dante, like some of the greatest people in this space, right? I'm so blessed in that respect. But I really do have to speak highly of this guy. He's come in, he's humble, he's an incredible trader. He has been wiping the floor with me when it comes to swing trading. Not sure, he'd want to take me on scalping right now, but I'm sure he would give it a damn good go. But if you are here, Pitt, can you please just share your Twitter handle with everyone? I'd really love you guys and girls to give him a follow. He's just a fantastic person and an exceptional trader, someone that I'm learning a lot from, and we're going to do some education streams coming up. But before I digress too much, let me show you this again very quickly. This is all for free. This is one of Pitt's very trades here, all right? Everything clearly explained in the triggers. You've got all the education, you've got the courses from all the professional trading team. You have a full-time professional trading team, which is probably the biggest honor of my life to be part of, and to actually manage that team as well. Not that they take much management, because they just crush it. We've got every educational resource that you could possibly want, right? And we want to give all of this stuff out to you guys for free, all right? So you can join the Discord for free. You get like 60 days. It's an absolute joy. And here he is. Is he on here? No, maybe not. Hello, my friend. It is well beyond my pathetic English to pronounce that, but it sounds like a beautiful name. And Pitt would help me here as well, because I'm sure he'd be able to promote it. If not, guys, do let me know. Guys, yeah, Erica, is there any way you can just find Pitt's trading handle for me on Twitter and just share that in the chat so people can give him a follow? Honestly, guys, don't feel compelled, but if you want to learn from someone that's really, really kind of impressed, you know, in my opinion, one of the best trading teams around, then I think it's well worth it. So let's spend a few minutes and try and run through 1, 2, 3, 4. We're going to do Coti, VET, AVAX, SOL, and EGLD, which is EGLD. All right. So let's see if we can do that all in about 7 minutes. Oh, you have done that. Thank you very much. I can't see it in my chat for some reason, but that is brilliant. Well done. Give him a follow, guys, and just learn from him. And also just come along, find in the description below on YouTube, you can find how you can just join the Discord for free. Any problems, come and just give me a shout. Get access to all the courses. Come on and crush it for that 60 days for free, and just, you know, gobble up everything you can. So, Coti, let's go. Let's stick with our strategic partners over at Binance, shall we? Have we done anything on Coti recently? We have not. So let's look at our weekly. Okay, what's going on a weekly scale? Well, we can see we had a mother of an inversion gap here. Big gaps like this, when you see these start to get closed below, look how well it respects. Closes below here. What does it do? Sells off to take liquidity from the low and comes back and respects this bearish gap. Beautiful. Really, really clean price delivery. Now, where do I think Coti's going from here? So Coti from here on a weekly scale for me has swept liquidity out from this low, which is super important because it's also a low within a bullish gap. Yeah, Erica, for some reason, I can't see that in the chat here. I'm not sure everybody can see it. Is there a way? Or hang on, I'll tell you, I'll just grab it here and pop it in from this end as well. Not for a lack of trying, Erica. I know it's just... Ah, there he is. That's it. Share it in the chat if you've got it, mate. If not, I am going to share it here. Anyway, for some reason, certain bits don't come up in here. This, ladies and gentlemen, is Just Pitt's Twitter. Just an absolute must follow. All right, guys, give that a follow for me, please. And give us your feedback. If you think he's brilliant like I do, awesome. If you think he's a twat, then also tell us, you know, but obviously constructively, because I don't think there's going to be many people on that side of the fence. Very welcome, Crypto Naroka. What a brilliant name. So look, delivering here on a weekly scale from a bullish gap. We've swept a low. We've got this. I would have liked to have seen a slightly shorter nose on this pin bar candle. However, I think price was certainly trying to draw towards this bearish gap. So on a weekly scale, we've seen this reaction. If price doesn't draw towards this, I really would see this as extended weakness here. The other thing we need to be careful of is we've got a balanced price range through here. All right, and that's when you see a bullish gap close through with a bearish gap. That should be pretty strong resistance here, in my opinion. Or obviously, if you have the opposite, you've got a bearish gap close through with a bullish gap, you would expect it to be strong support. Now we kind of see this area here. I think price wants to draw up to here, and then it can potentially go lower. But I like the fact that we haven't displaced much below that low, meaning that we haven't had a strong close in any way. But should we, you know, continue down, then I think next target is 0.06130, and underneath that, then we're talking about 0.04953. So look, we know there's a bullish gap there. We know we're kind of drawing towards that. So let's now move to our daily and say, okay, what does this give us? We can see here we've got some really nice balanced price action here. That's the low that's capping the market, in my opinion. That swing low there, why we've had that support here. We set this failure swing. Now price is here. I think if we start kind of closing back below this here, then I would look for price to move lower. If the day closes in and around, Raphael, hello, mate. If price closes in and around here, then quite simply, this is my line in the sand. I expect price from here, if it creates this gap, to draw back towards it and reject from it. If, however, it closes above it, then I am definitely all about these equal highs here. Okay, that's the kind of short-term play. 4 hour. really, really simply, 4 hour plays into our theory beautifully at the moment, because we can see we're just getting that big rejection from that bearish gap that overlays with our daily bearish gap, in which case I'm watching for a reaction down here at 0.07225. What you want to see here is a good reaction and price climb back above this level if we want to see strength, but I need to see a close above this, which is roughly going to be 0.07800 for us to start taking out this high and this high. But I do think if we close above this, we rip for those equal highs quite aggressively. So that's Coti. Now we're going to go with VET, not VERT. So back to our weekly. What are we doing here? Cool. I mean, this is really good along here. Okay, so very, very similar. And I know a lot of these are going to look similar. We got the big inversion gap here. I'm not going to kind of keep going over that. But yeah, this one was a little bit more significant here, right? That inversion, that led to us pushing lower. However, again, in a similar kind of state of affairs, we've taken that low now. I do think price is going to look to draw back towards this gap if it does. You know, weekly scale. So now we go to the daily scale. We say, okay, well, what plays into that? Price actually looking pretty weak here. So what would we want to see? Well, one thing that's a little concerning is that we have just closed below this. Now, you notice that I've used this up close candle as the order block, not these two. And that's because these two and this one here are within the range of this larger one. So I consider this the true order block. Now, ultimately closing and holding below this, I'm targeting this low. This lows at 0.01890. However, if price comes into here, and why I'm taking this as the order block and not this is because this has extended beyond the low of this, so it's very much its own beast. I first of all want to see price close back above this to hold this area and then push up higher. So you can see how we're in this kind of state of flux at the moment, but what the 4 hour is telling us is that that's the gap that we need to conquer, right? If not, we've ultimately taken liquidity below that low as it stands. So we want to see how this reacts. If this 4 hour closes and we get a big long downside wick, I'd be a bit more confident, but I'd want us to step back above this. Yeah, close above this here, which is about 0.02276 to then push up ultimately for these highs that rest up here. And we know this is obviously the order block up here as well. So now AVAX. What are we looking here on the AVAX? Okay, weekly scale. Yeah, we inverted a really big FVG here. Now the significance of this one is as follows. Support, support, support. See what happens when we get down below the kind of equilibrium of these gaps. As it closes here, yes, it does draw back, but ultimately where's it drawing back into? Probably into the order block here, which you can see it tags, or in and around that area. And then look, we get that big sell-off. Now, that was the first time, but this close below it here was the significant one because we then invert it, and that just means, you know, we know what that means. All right, so let's get rid of that. Now we've set this weekly low below us. All right, so that definitely becomes a target, and we've got a little gap down below that as well. So now looking on the daily, what is price doing here? Well, again, we haven't quite set this as the bearish order block, so we want to keep our eye on that. We are down below the 50% of this. However, it does look like price is driving down. I think really from here, one thing the bulls have is that you're starting to build these key kind of liquidity pools higher up in the form of all these highs. Yeah, price loves to run them at times. But ultimately, look, you know, this is a really, really big sell-off. The issue that we've got here is we've had one hell of a corrective move lower. All right, so if we look at that and we put our Fibonacci on, we would normally look for price to come back above the 50% here. So if we are looking for that, then we want to see a close above these. Yeah, close above the down close candles, and then for price to move up. But I would definitely have these equal highs on my horizon as well. Now, the 4 hour, to give us the context, I imagine it will probably look similar to the others. Yeah, absolutely. Delivering from this bearish gap here. Quite simply, we just want to see that closed above. If that gets violated, it turns purple. At the moment, it's not, it's red. Price, you want to see it sweep the liquidity below here and have a strong reaction back above. If we see that stronger V-shaped recovery, then I really do think we're going higher. If not, next downside target to reach is at 19.52. Okay, that is AVAX. Now we're going to do SOL and EGLD. AVAX is underrated for accumulation if it goes down under 19 or more. Nice. Yeah, I mean, look, I think lots of coins, to be honest, I think lots of these are, going to give good buying opportunities as long as you're willing to hold them, right? I think as long as you control your portfolio and you manage your risk well and don't panic sell when you're on the way down, flooding the market with liquidity, that typically, no offense to anyone that does that, because I think we've all done it. I used to do it horrifically many years ago. I gave loads of liquidity back to the market along with a lot of my personal wealth. It's only really when I kind of learned, look, if I think this is valuable, the same way as a stock or a share, am I investing in Tesla? Did I invest in Tesla 5-8 years ago because I thought the next week it was going to make me a millionaire? No, I invested in Tesla back then, the same way that I invested in lots of different companies, because I see the future, years into the future, see it as a company that you've got belief in, the team, the project, everything. Don't just buy it because some twat on Twitter tells you to do it. Go and look into it, start to understand the technology if you're an investor. Don't just buy it because someone says, oh, this dog coin's going to go to the moon or whatever. It's just nonsense. Find out the reasoning behind it, the team that's behind it, and why you deserve to part with your hard cash for that, right? So anyway, before I digress, we're going to kind of jump on this live show in a few minutes anyway. I might be a little bit late, especially by the time I go and make a tea. But what I like here is we've taken out liquidity below this cluster of lows. That low didn't take that low, which didn't take that low. Beautiful, beautiful cluster of liquidity sat down there. So we've had that reaction now. Yes, we've inversed this gap as we've seen on the weekly. I won't draw it in to bore you with the same thing. But realistically, what are we looking at here? Lower high, higher low, higher high, lower low. Seems like indecision to me. If I've not got a clear read on that, I'm going to move down a time frame to here. And I'm going to say, okay, what does this look like at the moment? Well, actually, this is looking quite strong relative because we continue to hold this bullish gap. Yes, we've rebalanced it here, but for me, as long as we hold above this, I'm expecting, some kind of higher prices, even if it's only to this swing high here at 152.18. However, if the daily closes below here, then all of a sudden I favor the move to the downside here, which is at 110 flat. Okay, super simple trading plan there. Yes, it looks heavy at the moment, but let's wait and see what it gives us. All right. Yeah, gold record highs, looking for that 2.6. Peter Schiff will absolutely be at half mast at the moment, I tell you that. By the way, guys, link to join the Discord for free is in the chat. I've just popped it up on there as well. I don't think you can click the link on the TV. It is also down in the description. So as long as we hold this, looking for price to pull up, close back below it, expecting it to go down. I would assume the 4 hour is going to paint a very similar picture to the other ones, but that's why they say assumptions are the mother of all. I won't say the word because it's before the watershed, but I think you know what I mean. Basically, the assumption of all mess ups, right? Because my assumption was that this sell-off would have a bearish gap in here. It doesn't, right? Now, that makes me feel even better because we've got liquidity resting here, 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 here. Lots of reasons for price to go up, diminishing reasons for price to go down. A low here within a beautiful gap, lovely target. Maybe we purge down to this, could see price doing something like this. That's within that gap, key liquidity pool here at 136.11. That's where I'll be looking for a recovery bid if we get it. But also at this immediate swing low here, which is at 137.78. Now we need to remember, I wouldn't be shorting into these whilst we hold that daily gap. Doesn't go bearish until we close below it on the daily scale. Let's sweep that liquidity, get back above it, and let's start going after these highs. The rest of the market, including equities today, are down, cooling off. It's the end of the week. We had big runs in everything yesterday, humongous runs. We actually couldn't even catch a long yesterday because it shot so quickly. Right for that to be correcting, but I like to think it's all correcting down into this big bubbling melting pot of bullishness that's going to let crypto rip with it. So that's where I am on SOL. And one more before we flick off the stream. Not quite going to get there before 1400, but we will be close. EGLD, USDT. God, I remember this years and years ago. It's just humongous, and I'll show you actually. Look, when this was trading at hundreds of dollars. Look at all the TA we were doing back then, right? Look, Jesus. This thing, its pomp was up at 544, right? But again, look, broken record time, inversion gap. Yes, fine, you would have lost, you know, from 544 down to 288, but that tells you want to be getting out there at least down to here. Then you can start bidding on the way down, right? It doesn't matter. Look, if you're buying here, buying it, if you think this thing has got value to it, just keep buying on the way down, just with what you can afford. Don't overextend yourself, right? If you don't think there's value in it, don't fucking bid it in the first place. Now, this really is at the low of the lows, right? But equal lows, and I love how we've swept the equal lows down here. They are key engineered liquidity pools, in my opinion. What else could we be drawing into down here? Well, I'll just put the top of the gap thing on here. I think we could come down to there, right? That's the gap right there, all right? So what better than how many people would have been bidding here, yeah, for price to come down, wipe them out, and then recover. Line in the sand on the weekly, quite simply, this bearish gap, we need to get back above that, okay? Bearish gap here, close above 31.44. Yes, we've got a minor gap here, but I think we almost certainly come to rip for at least these equal highs and probably higher. We've had a really big sell-off on here, right? So then on a daily scale, what do we need to see here? Okay, so again, you know, plays into the part that we've got this kind of bullish move here. We closed yesterday's candle below, letting us know that today we expect price to draw up and then sell off again. Now, ultimately, this here is our downside target. Big, long, abnormal wick. You can just smell the liquidity below that if it's going to keep going down. That is sat at 21.77. I'd be looking for bids down there. It's not my style to just sit there and just put bids on, by the way. I just kind of wait down and I get that confirmation pattern that I was talking to you about earlier. And then very quickly onto the 4 hour. What do we need to see to catalyze that recovery? And again, this looks like our other charts here. Got a big, beautiful bearish gap here. We continue to hold that. However, what I like about this in terms of looking at a recovery here is that we have this bullish gap here with that low. Price has ripped into this, taken liquidity before that. If we climb back above this here, then I would be happy to take some short-term long trades into that. And in fact, I'll even show you what that looks like for me. Right, I love the fact that we're below Asia's range here, key liquidity pool. You know, we've drawn down below New York's opening price. We're below midnight price. Okay, on the 15-minute, this is looking a little bit, but I would just say, look, 15-minute gets back above this bearish gap here. Yeah, and I really do think we can start running on this liquidity pool that's higher up here. And remember, all the time, we don't need to be right. We just need to be right enough to secure our stops, get our entry up. And then if our expectation is that price is going to draw up towards this gap, then we can just get ourselves in a little position here. Price closes above, you do something like this, put your stops below the swing low, and then aim for the highs there, secure your profits there. And if it's good, you rip for probably a lot higher than this. You could have even maybe caught the bottom, so be careful. Make sure you leave a little bit in there. And if you don't, and it fails and it goes down to zero, just make sure that you've got your risk in place. A very good friend of mine told me recently, today and every day I go to this chart, I'm willing to spend 2R, because he understands his systems, his practices so well, and his strategy so well, that he is happy to pay that as his tax. Our traders' tax is that we have to give profits back to the market. It's the way to keep the market alive, to keep it efficient, and to keep us all doing what we love. All right, guys, look, I hope this has been useful for you today. It's been a real honor stepping in for the legend himself, Crypto Burb. Please do tune in again next week. The legend himself, he will be back, and we'll have TA to suit all of your needs, right? So please do give us a follow. Please do leave a like if you enjoyed today's show. Please do come and join the Discord. There's no catch. We're not going to keep you there beyond that period. We are a paid group. We are. Do you know why? Because you get what you pay for in life, right? That's the sad truth of it. You know, if you want a lovely car, go and buy a nice car, right? If you want a lovely car and you weren't going to spend 100 quid or $100 on a car, it's probably not going to be that nice. If you want one for free, then good luck. You wouldn't go for a free surgeon, for example, etc., unless you're in the UK on the NHS, in which case take your life in your own hands, all right? But look, it's free for everyone. We're not going to trap you into it. If you want to stay afterwards, you are more than welcome. But if not, just come in and enjoy all our resources, the trading team community, and remember to give Just Pit a follow. Have a fantastic week, close of week, weekend. I'll see you on my live show on Monday, which will be at 1100 UTC, and again on Wednesday at the very same time. Wishing you all a fantastic weekend ahead, and I look forward to seeing you all around the nest.